right, good morning. What kind of watch should I wear today? What do I got? Reminds me of my wedding. All right, guess we gotta get going. Gotta find out where the music's coming from. Could be a problem. I think it's this one. There it is. Alright. G'day, mate. How are ya? How's your mum? Let me mark this. Oh, wait, I can't do it there. Man, I'm all over the place. It feels like a Monday, doesn't it? I guess I need to be over here. There we go. So I got to move this to here, move that to there. Almost done. I think what I can do is I can mark this and then I say, hello, 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 yeah. How's your mum? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone, your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader just like you. I'm also a former male supermodel. Sure I am. Yeah. Anywho. So I'm a trader just like you. I like to base my trades based on the why the markets are moving. So I'm trying to figure out things fundamentally first and then technically later. Technical analysis, in my opinion, tells you the right price and right time, but it doesn't tell you why. So we have to figure out all these things. Very cool. So ask questions, get involved. I will do my best to help. Yeah. And then, of course, throughout today, I will pop some polls so that we can vote democratically on what assets that we will cover today. Coolio. Bada bing, bada boom. What if I do that? There you go. How about that? I was just saying, use tradeplans.ai as a second opinion. Before you take a trade, whether it's a demo account or your live account, get a second opinion. It won't hurt you. It might point out something you missed. Artificial intelligence is pretty smart. It's free. It's fast. It's detailed. It's even pretty. Okay? If you want perfection, watch a Barbie movie. Every once in a while. Yeah, I get the jokes right. Yeah, very cool. Yeah. Cool. So anyways, tradeplans.ai. Seriously, I spent a lot of money on this. And I think it's really good. And I hope you use it. How many people here, there's a few hundred people, but how many people here have tried tradeplans.ai? Yeah. Well, cool. Yeah, it is incredible. It really is. AI is really, truly the future. So if you are ignoring this this new technology out of, I don't know, ignorance or fear or something else, I mean, dude, I'm not even charging money. I mean, I don't know what's holding you back. I'm not even charging money. You should try it. It's pretty cool. So right now you can do stock indices, Forex, futures, right? Gold and silver. We have some crypto on here. Get a second opinion on all your trades. Okay, cool. Swing on by Investor Bootcamp. We got some really cool things going on here that are mind-blowing actually over here too. But it's $88 a year for a basic membership that includes about 100 hours of training videos. Yeah, I mean, pretty amazing actually. $88. There's at least $99 worth of value, maybe 1,000. But anyways, this is really where our relationship starts. And we have a new program starting for those that want sort of the next level. I'm not going to talk about it now, but if you know, you know. Okay. Tradersway.com, an ethical foreign exchange broker. I've been recommending them for 8 years. I think you should check them out. Pretty simple, straightforward. They're fast. They're good. They're trustworthy. You should open up a demo account and see if they're appropriate for you. See if they earn your loyalty and respect, like they earn my loyalty and respect. Pretty simple. You should try them out. They're good. You'll even find actually the back office is like clean and organized, and it's very good. The big fella says AI is really bad for humanity. I know it seems cool, but it's a double-edged sword. Well, in this case, it's not bad for humanity, big fella. It's giving you feedback on a trade plan. You know, but yeah, but your bigger concern is AI in general. Sure. Yeah. And in all leaps for humanity, we need to make those leaps careful, for sure. Yeah. No, I agree with you. And The problem, too, with a challenge like that is what we're talking about is ethics. And we don't share the same ethics. Not you and I. Well, I don't know you and you don't know me that well. But the idea is that even culturally, different cultures have different ethics. Like ethics change over time. So whatever. But they do. AI could, definitely needs some thoughts. But anyways, let's go here. Let's go. I drew this quite some time ago. I have dollar probably going up higher before it makes the longer term down. And we paused right here, 10 days ago, I guess? We paused a couple of weeks ago at this level of resistance and it dropped. And now we're back up moving to the actual high, which we discussed quite some time ago. And that's where we are as far as dollar strength. I don't expect it right now to go very, 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 very high. To get to high levels like this, we would require recession. Okay? You see what I mean? And for that to occur, I think the catalyst now is going to be probably China. Today at the Quant-Box, oh no, I didn't even do the Quant-Box thing. You didn't even see Quant-Box. But we have over 1,000 subscribers now over at the Quant-Box YouTube channel. And at 10 a.m., today's Quant-Box video is released to the public for free. Even though I charge money to do those, they are free. Once again, you should use them. But I equated the Chinese economy like a ballerina wearing a tutu, standing on her tippy toes, holding barbells. Okay? And her legs are shaking. So if the Chinese economy has an exogenous shock, and that could be happening in the month of September, there's some things happening in the bond market that are coming to fruition, and I think some Chinese real estate developers are on the precipice of default. And that could be the thing that just tears everything good that's happening in the U.S. economy right now, tears it down. So in a situation like that with massive Chinese collapse, well, yeah, the dollar's going to get strong. Yeah. Okay. Stewie's like, what's the URL? Oh, it's not letting me type. Hello, try that. At Quant-Box. I think I spelled that right. Okay. So, barring that, if that doesn't happen, I'm going to go seasonal risk on. Okay. That's that. So I just wanted to point it out that this is not the dollar strength that is occurring right now is not totally unexpected. It may not be desirable, but it's totally within the realm of possibility. But not yet, Richard, in this window. Remember, I gave a 5-week window. We're basically, yeah. But anyways, let's take a look of what's on your mind. Hang on. Mm-hmm. Okay, we're going to do a poll to see what you want to do. Wow, YouTube. Come on, YouTube. There we go. Gold or XAG or Bitcoin or I guess we'll do WTI. Let's see what's on your mind. Let's start with a commodity. Okay, please vote. Bum ba 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 da 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 da. Bum ba 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 da 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 ba da 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 da. Come on, we need some more votes, guys. I got a funny warning from YouTube. Your stream's current bit rate is higher than the recommended bit rate. They want me to lower my bit rate. Isn't higher better? Huh. All right. End poll. All right, looks like a clear winner is XAU. Gold, gold. Let's do some gold. All right, XAU. XAU, XAME. XAU together happily. Okay. All right, so we got that change of direction. Let me zoom in a little bit on the 4H. Zoom, zoom, zoom. And this is a predictive and then actual 21 EMA. You can see from last week, we had this idea of up into an aggressive target, which actually was hit. Isn't that interesting? We actually hit that number. And then immediately collapsed, and then back to the old resistance, the old one, not the ultimate high, just the consolidation high. And now this interesting move, if I drag this out, this is old resistance, old support, now resistance again. Ooh la la. Yeah. So maybe a slowdown to the up. Well, let's take a look at the daily. And, well, if this ends up going up, let's mark this out, then the 21 EMA on the daily is around the 382 Fibonacci retracement. Okay. Okay. Once again, even though I've been a bear on gold for quite some time, the idea of being long is a bit about an increase in aggregate demand, aka no recession, and B, disinflation slowing significantly. Meaning it was it was fairly easy to go from 9% inflation to 3-ish, but to get to 2 might be very difficult. So if it's going to be nearly impossible for disinflation, then it'll be more possible for reinflation, and that would be bullish for gold. There's also maybe a potential for US dollar weakness presenting itself seasonally. So it's just like one of those things. It's just a trade, eh? So we'll see if some of those things kick in over the next 5 weeks. All right. Suppose we could drop into a smaller time frame than that and say, well, what about today? Today looks bearish, don't you think? So if you're trading a 15-minute chart or if you're trading an hourly chart, you're probably selling rallies down into support. Was there anything in particular that happened on Friday, Richard? Yeah, well, we have a big news event. So there's this idea of sell the rumor or buy the rumor, sell the news, and then the next catalyst is really the Fed meeting. What about non-farm payrolls, Richard? So anyway, so what you want to do is if you find yourself wanting to buy this around 1925, then you're sitting around maybe on the 5-minute chart waiting for some bullishness. So Richard, if there's a pause in play, then it's risk on. The car says, Quant-in-a-Box is so helpful, it keeps me out of bad trades. That's always a good start, right? Okay, so again, you might be long-term long, but right now it's short-term short. On a 15-minute chart, for example, it's definitely bearish. It's been bearish since yesterday, right? London yesterday, basically. So it's still bearish. So on this time frame, you can just sit and wait now. Wait and wait and wait. You might have to wait all day for this to turn bullish, but that's okay, right? So anyways, we'll have to wait and wait and wait. All right. Let's do another poll. Let's do, I'll put WTI back on there in case you're interested in commodities. You probably are. In SPX, what else should we do? We can do NAT, G. All right, let's just see. It's an interesting mix. Ball, Ba 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 boo. Boo 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 boo. Boom ba ba boom. Ba da do 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 do. Da 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 da. By the way, if you happen to know that I'm starting an organization called the CIA, people are signing up today. Yeah, we're exactly 99 days away from our first meeting. I mean, I'm in contact with the hotel over the weekend and should have final information soon, likely in the next couple of days, so that you can plan your schedule appropriately. Okay, I need a few more votes. Only half of you have voted. Maybe it's stuck. So go ahead and vote. Bum-ba-da-dum. 50% want the WTI. All right. Okay, so there's my trade plan from last week. How did I do predicting this week? Oh, not bad. Look at that. Snap. Oh, my God. So anywho, 618 predicts a 1382. We actually went to probably 200%. I don't have a 200% fib on this setting. But anyways, nonetheless, very interesting. What you need to do is mark the old top, mark it up, okay, mark that. I'll probably want to mark this, mark that. All right, we got it all marked up. Okay, probably want to do a new measurement of the new top and just kind of look at that. Yeah, the second one is a 382. So yeah, it's a pretty decent, right, zone. So I think what we would be doing, assuming continued bullishness, is a similar trade ratio-wise. In this case, we're going to call it a 382, and that predicts a 1618. And that's pretty aggressive. I don't know if we can really, truly expect that, but that's what Fibonacci says. So this might actually point to vulnerability where we might have a bigger down than this. But nonetheless, what would bring this down? What would make oil fail? That Chinese default. Huh? Chinese default would bring this down. It'd be interesting if it went all the way back to the 70s, like 75, because then that would set up a big head and shoulders, and nobody wants that, because that means everyone's going to be in a world of hurt if that happens. So, anyways, I think this is interesting. I think this is an aggressive trade, though. But who knows? We only feel that way now. But, you know, the narrative could improve over the next couple of days, and maybe that takes off. Okay, dropping into maybe a smaller time frame to look at the same thing. Our bullish bias zone is lower than I would like. So that does, see, like, you see, I call these stairs, climbing stairs. And this buy zone's lower than the one before. Maybe it was because Monday was a holiday. But nonetheless, a double top suggests that we could be on our way down to 83. And we're at, you know, we were at 80, 86 and a half. So it'd be interesting what happens today. Will it kick off this moving average? Look at the 4-hour moving average, and it looks like it also is down near 83. So it looks like short-term short right? Where we drop another couple of bucks before we even consider buying it back. Hopefully that makes sense. Some down before the up, maybe a couple of days down before the up. And of course, we're vulnerable to any bad news out of China. And I think we're realistically vulnerable to that bad data. Didn't spell that right, did I? All right. Well, I'm sure you'll know what I'm talking about. Let's do some stock indices. They are a leading indicator, or not a leading indicator, let's say a realistic indicator. Ba da dee dee da da dee dee da ba 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 da da ba 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 da bo 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 bo. I should have put ASX up there. It looks really nice, doesn't it? A couple more votes, please. Dakar, they're not more accurate. They're exactly correct. Okay? The difference between those two are always going to be duration, which isn't time, it's volatility. So, yeah. Anyways. All right, let's end the poll. Pretty clear. Let's go to a smaller time frame. Okay, we're caught here. And if we're going to measure, well, let's not just measure there. That's pretty obvious. Let's go all the way back here to last week. Try to what did NFP do for us? And really nothing on the shorter run. Okay. Going out to an hour, what I see here is I see a double bottom. I can't grab the double bottom, but I can draw it. Let's see. No, I can't grab it. Interesting. Anyway, so I see a bottom. And now I see this, a new bottom. Okay. So anyways, I'm watching that carefully for a new up. This was our summer fade, and so are we reaccumulating these positions? That's how I'm looking at it. A decade. Favor, please expand on what you're asking. I'm not quite following. Just please expand on that. But on the idea, do I make decisions based on decades? Sure do. You might be commenting on the 10-year versus the 20-year. The thing is, the 20-year, when you look at something called duration, it has to do with how much an asset is impacted by the Fed raising interest rates. And the 20-year is more sensitive than the 10-year. And that's essentially your duration. And so, yeah. The big fella says, what did China default on? They haven't defaulted. It's if they default, and I believe they will in the next couple of weeks. And if that happens, I could change things. Now, if they find a way around it, then that's risk on, and that's good. They found a way. Great. Okay. Next few weeks, so yeah, like in the month of September, right, big fellow? Yeah. Now remember, it's not a country. It's a company. But nonetheless, I think the government of China actually wants some of these guys to default. The idea that, well, I mean, let's maybe be critical of American policy. Over the years, American policy has been to save everybody from the pain. The United States government during the 2008 financial crisis forced all banks to take money from the government. Now, some good banks like JP Morgan actually said, no, we don't want it. We don't need it. We're risk averse. In fact, we prepared for a crisis a couple of years before the crisis showed up. So we're not over leveraged. We're not overexposed. We're actually a good bank. And we don't need or want the money. And the government said, you can't say that. You have to take the money. Because if you don't take the money, everyone will know you don't need the money because you are a good bank. And that would be bad. Now, when you get to a logic like that, something stinks. And China might be in the same situation where there are some over-leveraged institutions, aka real estate developers, and they might choose, instead of too big to fail, they're so big they need to fail. And that would be quite a different point of view. Now, it's not like good or bad. China might have just simply learned based on what the United States went through when they went through a real estate crisis. So instead of bailing the banks out, they might just say, well, let these defaults occur. And the bondholders will be crushed, and the borrowers will be crushed, and maybe the economy will deflate on the short run, but maybe China's okay with a tough 5 years. Or a tough 10 years. Maybe they're okay with a lost decade because they have a 300-year plan. And in the United States, we don't have a plan till the end of the year. So I'm just saying there may have been a learning process. And that might be their decision. Go ahead and let them default. Right? So, be interesting. Nonetheless, it won't be good for the global market. And the cool thing as a foreign exchange trader is we can easily regroup and do perfectly fine in that situation. And many other investors and traders don't have that luxury. So, for example, it's just not easy for most people to short sell the stock market. They're right. It's harder for a lot of people to short sell oil, for example, or gold. But in this case, we can look at these changes and make decent, rational decisions to protect ourselves. And that's great. So looking at it from this point of view, we're actually in a bearish zone, okay? But we could soon be in a bullish zone and then kick off this. Greg says, this is a reason why I trade Forex today, not stocks. Absolutely. All my equity positions and even my bond position is hedged. Forex is just liquid, so I don't have to be hedged. I'm not sure why you would hedge Forex if you're in a cash position. Now, I know institutional investors that trade structured products, which looks a lot like Forex. It's just, well, it is Forex, but it's not cash. It's not liquid. They're private contracts. So therefore, they're not, right? They're not liquid, so if things go wrong, you would hedge in the cash market. But if you're a pure cash player, why would you hedge? Why wouldn't you just get out? Why wouldn't you just get out? If it's not working, why would you hedge it? Doesn't make sense. So anyway, so what I'm looking at here is I'm still a bull, and I believe price will stay above this area and then work its way back up. Rich is interested in swaps. Great. How about like futures versus forwards? Can you, like an undergrad question would be, describe the difference between a Forex future and a Forex forward. And yeah, that'll Pachow, right? So anyways, we'll see if this climbs back up. That's what I'm thinking so far. I'm okay. All I see right now is seasonality, which is not on this chart. And I see two things. Higher high, which sets up my higher low. I have two possible prices. And if that fails, I'll probably end up trying again at a double bottom. Right? Richard's like, just did that, right? A futures contract is a standardized contract traded over an exchange. And a futures contract is not traded over an exchange. It's a private contract between the producer and, in this case, the user. So a forward would be me going to a farmer and saying to the farmer, I'm going to buy your wheat in September. Let's agree to a price. And I say to the farmer, how much wheat will you be able to produce and give me on that day? And they're like, well, we're not actually sure, but usually somewhere around, 25,000 bushels or whatever it is, right? Like, somewhere in the neighborhood of roughly. And you're like, okay, well, we'll come up with a price, and that's great. Well, a futures contract would be a standardized, 100 bushels, and then it's traded over an exchange, and you don't know what farmer is maybe there'll be a bunch of different farmers' wheat in your actual delivery. You don't know who the farmer is, but you'll get exactly, right? You'll get exactly that amount of wheat on exactly that date at exactly that price. That's the difference. Anyways. All right. Let's do another poll. Let's do boom again. Okay, what okay, here, you ready? Boom. All right, let's see how you're voting. Do we have enough? Just barely enough, and oh, it's so close. Very close, neck and neck and neck. All right, half of you voted. The other half, I guess you're driving and you're listening to YouTube while you commute, or you're busy, you broke your pointy finger and you can't really click on your mouse. I don't know. I don't know why you wouldn't vote. Anyways, 3, 2, 1, 1, 1. Kick busted. Boom, 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 boom. All right. We're going beast. We're going beast, y'all. All right, let's do the beast. And beast is already fully recovered. Okay. Here's our bottom step. Here's our secondary step. And we're already zooming in, so I got to go this way. Okay. Where's my drawing tool? Let me just get that going. Okay. Okay, it's one way of looking at it. Now we know this is an aggressive buying pivot for the month of September. Pretty simple swing trade. It's actually a position trade. Pretty simple position trade based on that bottom. Okay. Our target is 190. Shut the back door. That's 500 pips up. Well, it's just what it says. It's not my prediction. It's just what it says. So we go to a 4-hour. Okay. And yeah. 4-hour. I have to really Trying to squeeze this in even on a 4-hour. Huh? What did you think? Are you happy that it says up 400? Now you're like, but wait. There's a double top and then a significant drop, and that's a lower high, Wayne. So why not trend it down? Because you're looking at the past. So you would be right technically, but that's not what I'm doing here. I'm not, describing the past. I'm predicting the future. And in a weird way, back when this was incredibly bullish, I was setting up to be ready for bearish. And now regain bullishness. Yeah? Oh, yeah. There's a lot of reasons why, but the big one I want you to look at, and this is, if you're only on your 15-minute chart, you'll miss things like this. This is just a role reversal. You see? It's just a role reversal. Oops. That's it. Just a role reversal. And we're just continuing mission now on the new month. So if you are a member of investorbootcamp.com, you've taken the courses, and you look at that and you're like, basic, simple, easy, straightforward, straight out of the course. I mean, we don't know the future, but that is the pattern. There's no doubt about that. Cool. Cool. Right on. Sweet. So you would be on your smaller time frame now, looking for your opportunities to buy. Today's buying zone was right here. Okay. Here's Monday's buying zone. Tuesday's buying zone. And we'll see what happens. Maybe this will creep up a little bit. And somewhere around here, which is our current price, we have a little dipsy-do tomorrow. And we'd put on a YAD trade. Yet another dip. Yet another dip. Yeah. Cool. I'm tired. I don't want to go through my charts again for the 50th time today. So let's take a look. This was posted yesterday. Oh, all right. All right. Buying gold. All right. Yeah. I suppose if I do it this way, yeah, I could see this person's thinking about in here. I don't like the pivots though. Like this person's using daily pivots at an S3. I mean, I guess the logic is, I mean, at that point, just statistically, it's not going to fall further. But yeah, I mean, it all ends up being the same thing. So I guess I don't need to be critical about that. This isn't my style of trading. This trader might feel like they're doing 20 separate trades. I just see it as one over leveraged trade because they're adding as it falls, but not as it rises. So this is like a grid style trade. I don't like that style of trading because it's just adding and adding and adding risk. And when you're right, you're very right. But when you're wrong, you're very wrong. And I never want to be very wrong. So the style of trading I don't agree with, but nonetheless, neither here nor there. See, like if I were to add that many trades, it would be on the way up. I'd be buying dips this way, but I don't buy dips this way, you see? So this is just one giant trade. So, you ain't fooling me. Right? Oh, I got 20 scalps. No, that's just one trade. One big fat trade. Okay, fine. Whatever. So I guess, is this okay? Is this okay? Yeah, and up to here? Yeah, I think I'm okay with that. Sure, I mean, yeah, I'm okay with that. Yeah, I'm not sure if it's working today, but in general, I'm okay with that. So I'm going to agree. That's fine. Let's take a look at this trade. Ooh, all right. Stock market going up. See, I see no direction. I can't even figure out what this person would want to do. Sell, okay, sell the S&P 500. See, I'm trying to express my challenge with this is like, you could argue, and the person, whoever wants to do this, probably would say double top, lower high, and they probably would say lower low here. I'm just less convinced. I mean, I cannot convinced. I don't see it that way yet. I understand that we can have a significant pullback, but I don't, like, for example, the 21 is above the 55. It's just, to me, it's inconclusive. There's a bit of over bias set in there. So I'm going to actually disagree with that one. All right, let's take a look at this. Buying USD yen. Let's take a look at what this person... By the way, you can notice that all these trade plans are anonymous. There's no way for us to know who these are. So you don't have to be shy. Okay. All right, so USD yen. Let me double check again. They're buyers. Yes, buying USD yen. Okay. 21 has remained above the 55. Let me delete that old. Okay. And then we here, which is at an M1, which is, perfectly fine for this bottom to occur. And so now what? Well, there's going to be a challenge right around here. But the trade plan is basically buying a dip, and I can see the dots here, so thank you for putting that. And this line here is helpful. So this person is probably thinking up to this level. And then a little dip into here, and then up. Okay. Taking it to 49, buying around 46. Yeah, I mean, the issue is I'd rather you have bought it down here. Because if you're a bull, you buy it at support. Is this support? So the plan is fine, but I think there's going to be a lot of risk of this. I might actually have to disagree with this in technique, but in principle agree with it. I'm going to agree with it, but it's probably not executed properly, but I don't really disagree. But I would have some commentary with this person, like you're buying it at resistance and you passed on the opportunity at support, I guess because of NFP. But there's resistance where we are now and there's resistance above us. So I'll agree with it. But there's some challenges to that setup, the way that it was set up. Okay, let's go here. Gold trade. See, the volatility hurts all of these trades. So, so the up, the down, the up, the down, the up. Okay. Yes, I agree with that, but this is probably going to be a time issue. Let me just double check. Buy gold. Yeah, okay, buy gold. So where's the risk? That's where I always start with. Where's the risk? And the risk is that we stop making higher highs, right? The risk is that this comes down. You see? So once again, I believe in principle. But with this setup, the way that it's set up, I mean, we face real risk that we come all the way down here. That's just the way that it looks. The way that this chart is presenting says that, you know? And it's this NFP issue, right? So we have to recognize that that bearish engulfing is important. And then the failure to break resistance is important. So is this the pattern going on now? Yeah, it probably is. But that is, it's hard to say here, you know? $21 is above the 55. I gotcha. Yeah. Stop, 26. Oof, stop is like right on it too. I think this trade is pretty good, but it's very vulnerable. So this actually here is where I doubt. The stop is 26, and it looks like this is 26. And it's almost like I'd rather buy it on the stop, you know? Right? Like, let's say this was my stop. This was my entry, not the stop. So not stop loss 26, entry at 26. So we have to wait for a $10 fall. The next plan would be allow it to break out of here and then buy it. So here's what I think I'd rather see on this trade. Okay, buy it here or buy it here. And like, so in principle, I think the direction is fine, but there, post NFP and maybe the holiday and the potential for bad news out of China, it's just like, oh my God. I think we could fall to 26, but I think we could go all the way back to like 1900. Like, forget 26. Like this area, oops, okay, this area is very possible too, where I'll do this in orange. You know, like in the back of my mind, I'm worried that we have to do this. So that makes this one, maybe too rich for my blood. It's close. I want to say yes, but I'm going to say no, and it's a time frame issue. It's a time frame issue. If it was last week, I might have said yes. This week, I might say no. I'm going to say no this time, but it's very close. It's a close one. Okay. It's, oh yeah. I want to buy a bigger dip, I guess. Mostly because I see this as a potential head and shoulders. How about that? Now, whoever made the trade could say, well, I'm looking at it on a bigger time frame, and then I'm like, okay, well, then you got me. Then yeah. But there's still some vulnerability there. All right. Pound yen. Okay, a buyer of the pound yen. Very cool. First thing I notice is a lack of trend. Okay. Bottom. Yeah. What time frame? 4H. Yeah, I suppose if you're going to do it, you're going to do it, right? Yeah. So, bottom. Okay. Now we're up here, but the plan shows more down. So, anyways, buy it 184.25. Yeah, like a little dip like this and get close. What I want to see is, you know, as close to this as possible. So 184, 84.25. Are these daily pivots? No, these are weekly. Yeah, even maybe a little closer to 184, but we're buying dips. We need to see, this is a market open. We'll need to see stock market rally today for that to work. But it is a swing trade, so I think it's a swing trade. So let's take a look. Buying it at 84, going for 87, which is the top of the range. That's an M2 to M4. So normally I'd say 186.33, but I understand this. Yeah, it may only do this one, and we consolidate one more week or 2 more weeks before an eventual breakout. But yeah, it's a soft trade because there's no trend, so there's a lot of assumption of future trend. Yeah, sure, I'm okay with that one. Okay, lots of built-in assumptions, but this is what we have to do. Are you guys enjoying this? I was thinking of doing an ongoing webinar where we just go through people's charts. So if you're interested in having your charts reviewed and getting a second opinion like I'm doing, and you'll get instant, within 3 seconds, you'll get instant feedback. And then you can get anonymous feedback by humans, your fellow traders like yourself, or by me. And I thought I would do an ongoing, maybe once a week, do a half an hour review of like 10 trades or something. That's right. Right? Your opinion, AI's opinion, my opinion. All right. So anyways. And like I was saying before, look, if you actually like it and you share my vision of getting a second opinion, kick in a little bit, huh? I'm putting in many thousands of dollars. Chip in a little bit. One of the things you can do, and several people have done this, is you can just say, you know what? You'll make a monthly donation and you put in, $10, for example. You're like, yeah, I'll chip in $10 a month. Cool. I mean, it helps. I mean, it sounds stupid, but, I have ongoing monthly bills just to keep it running, yet alone paying for all the development. So, hey, Aiden's got to eat. That's the weird thing, too. Like, at what point does the intelligence stop being artificial? Aiden eats. What I mean is every time you post a trade plan, Aiden thinks, and I get a bill. AWS, Amazon Web Services. So it sits on the Amazon cloud, and it uses processing power. Literally, Aiden thinks, and it consumes energy. Now, you eat carbohydrates, but computers and machines eat hydrocarbons. Carbohydrates and hydrocarbons. At the end of the day, it's the same stuff. It used to be organic material. Now we burn it for fuel, either in your stomach or at a power plant somewhere, right? But anyways, it's interesting to say, oh, Aiden thought about your trade plan, and I get a bill. So anyways, if you can chip in, that'd be super cool. It just keeps it alive. And also, like, if nobody cares, I'll just keep it for myself. But that's silly too, right? So, whatever. It'd be great if you could chip in. That'd be great. That'd be great. That'd be great. That'd be great. All right, so I think we'll leave it at that. Oh, it's Tuesday and the week is already super long. So one of the things I'll be working on today is finishing my work on the CIA, the Council of Investment Advisors. If you know what that is, I've already created something for you. And if you don't know what it is, don't worry about it. But just for those that are already interested, let me post a link. And there's only 24 people going to be on this council. And I think we're at about 18 people. So most likely by the time we get to that first meeting, that's it. It's done. We're done. No more people. And so I think that's super cool. So anyway, yeah, I personally am looking forward to it because it's interesting and it's different from what we talk about all day, every day. So anyways, it's exciting for me. So peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day, everybody. Thank you for being subscribers. Maybe click the thumbs up on the way out. Tell YouTube this was great. Appreciate you. Cheers.